Okay, let's get right into it. On Monday, October 27th, 2025, the stock market didn't just have a good day. It went ballistic, smashing records and soaring into territory we've never seen before. But behind all the celebratory headlines, there's a much more complicated story. So what's really going on here?
And I mean, just look at these numbers. The gains were huge across the board. The tech-heavy NASDAQ just rocketed up, jumping a massive 1.9%. The S&P 500 wasn't far behind with a solid 1.2% climb, and the Dow put up a very respectable 0.7% gain. To be clear, these are not small moves. This was a powerful, market-wide surge.
So just how high did we fly? Let's take a closer look at the numbers, because that's where you really start to get a sense of just how historic this day was.
These weren't just new highs for the year or something. Nope. These are all-time closing records. The S&P 500 blew past 6,800. The NASDAQ soared over 23,600, and the Dow closed up above 47,500. These are huge psychological milestones that investors have been dreaming about for a while.
So, you have to be asking, what's the fuel for this fire? What's causing this incredible rally? Well, it pretty much boils down to a potent mix of three main drivers.
Think of it like this. There are three big engines pushing this whole thing forward. First, there's a ton of optimism around international trade. Second, there's the AI and tech boom, which is just impossible to ignore. And third, everyone's kind of holding their breath for the Federal Reserve's next move. Let's break each of those down.
Okay, so first up, trade optimism. There's a really important meeting between the US and China coming up this Thursday, and the market is buzzing with hope that we might actually see a deal. For investors, any hint that tensions are easing between the two biggest economies in the world, well, it's like pouring gasoline on an already roaring fire.
Now, the second driver, and you could argue it's the most powerful one right now, is the AI and tech boom. And this is not just hype, folks. We've got major tech earnings coming up, expectations are through the roof, and the market really sees AI innovation as the main engine for growth going forward.
If you want a perfect example, just look at Qualcomm. Their stock shot up an incredible 11% in one day, just from announcing some new AI chips. It's just a crystal clear sign of how much energy there is around anything related to AI right now.
And that brings us to engine number 3. Of course, all eyes are on the Federal Reserve. They've got a meeting later this week, and the betting money is on an interest rate cut. Lower rates make it cheaper for companies to borrow and invest, and that just adds more fuel to this already exuberant market.
So with all this good news, it's a party for everyone, right? The celebration is universal? Well, not exactly. And that's the big question. Is this rally really as healthy as it looks on the surface?
Because if you start to scratch beneath the surface just a little bit, you begin to see some pretty significant cracks.
One of the biggest concerns is that this is an incredibly narrow rally. The gains aren't spread out everywhere. They're almost all being driven by just a handful of giant tech stocks, the Magnificent Seven. And whenever the entire market's fate rests on just a few companies, it makes people pretty nervous about concentration and risk.
And this highlights a pretty jarring contrast. It's like a tale of two economies. On one hand, you've got Wall Street popping champagne over all-time highs. But on the other hand, you've got Main Street, where everyday folks are still feeling pretty down, worried about high prices and their job security.
And because of this disconnect, the experts are totally divided. They're all asking the same question. Can this bull run actually last? So let's look at the bull case. The optimists out there are pointing to a surprisingly resilient economy and really strong corporate profits. They argue that all this innovation in AI is creating a really sturdy foundation for even more growth. For them, this isn't a fluke. It's totally justified. But then you've got the bear case. Strategists, like the ones over at Citi, are waving some serious caution flags. They're seeing investors get euphoric, and that's a word that always makes analysts nervous. They're warning that this euphoria, mixed with all the uncertainty that's still out there, could be a recipe for some serious volatility down the road.
So where does all this leave us? Well, we're stuck in this tension between a market that's absolutely soaring and a public that's still pretty anxious. And that raises a really big question about what comes next.
And that's really the thought I want to leave you with. With the market hitting these incredible highs while so many people are still worried, are we seeing a sign of real sustainable strength that's built on true innovation? Or is this just a beautiful bubble pumped up by euphoria that's just waiting to burst? That's the question that's going to define everything.